The U.S. stock market was mostly lower here today with the exception of the NASDAQ, but it wasn't quite as extreme of selling as we've seen in prior days. Nonetheless, the month of September has been a more difficult month after, of course, 7 or 8 months to the upside for stocks. So a little bit of a unnerving experience perhaps for those that might be newer investors out there, but for those of us that have been around long enough, it's par for the course, right? We need these breathe in and breathe out types of moments here to have a healthy market. So we'll take a look at all of the activity as usual. We're going to see some interesting movements within currencies. The US dollar was particularly strong today, and that did cause some pressure, some negative performance out of the materials and energy space. Then we'll take a look at our trade application example, where once again I wanted to focus on one of those Crispr companies for a trade to the upside. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's September 16th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down to our description area and make sure you signed up for our email distribution list. We're also heavy users of Twitter. If you're not doing so already, I would encourage you to follow me at Brandon Van Zee. And we really appreciate those of you that click like and retweet on those Market Outlook related tweets. And then last but not least, we do have a presence on Facebook. Feel free to join us at the web address you see in the logo in front of you. All right, let's go ahead and jump into today's activity. And let's go ahead and get started here with our heat map of the Market Scholars 1000, which gives us a sense not only what's going on here in the United States, but also some individual stocks from across the globe. And as most of you are aware, the green patches are the up stocks and the red patches are the down stocks. And, they kind of, depending upon the extremity of the move, will be either darker shaded or lighter shaded. So let's kind of get into a few of the movements here today. Let's start with the upside performers. You can see Palantir was a nice performer here for us today. We were up 5.72% on that somewhat recent IPO. Remember, it was last fall or last early winter when Palantir went public. Some of you might have seen me tweeting about some IPOs here recently, those of you that follow me on Twitter anyway. Dutch Bros, of course, catches my eye with my family ancestry coming from the Netherlands, but Dutch Bros is a very popular coffee company out west here. We actually have a location just down the street from where I live here in Utah, but it's started in I believe, Oregon, and is in 11 states so far. So for those of you out on the East Coast, you're probably not familiar with their product, but I will tell you just from firsthand experience, those coffee shops have lines around the block, and they're very popular out west here. So Dutch Bros has been a spectacular performer for the first couple of days. That ticker symbol is BROS. And then later on today, I noticed another recent IPO, OfferPad, which is OPAD. It was up like 60% today. That stock had caught my attention here earlier in the summer when they IPO'd as well. It was actually just a month or two ago because my in-laws sold their home through OfferPad. I thought it was kind of an interesting experience there. I wanted to keep my eye on them. So anyway, some of those newer stocks out there could be of interest. I know a lot of times we tend to focus on like the big Dow Jones industrial names, the big blue chips out there, but there's a lot of opportunity with some of the smaller cap and newer and recent IPO types of companies as well, and Palantir certainly coming to life here all of a sudden. Anyway, let's go ahead and see what else is moving on the top side. Here's another nice green patch, and this is a Firm Holdings. Speaking of newer companies to the stock market, this is also a company that did an IPO here within the last year or so. This company has had a heck of a run here in the last, let's call it, month or two. They were the one that teamed up with Amazon recently. That's one of those buy now, pay later service providers. And it just seems like that area is red hot right now. In fact, I remember talking about that area here in the Market Outlook videos maybe a month or so ago, where consumer finance as an industry group perspective, was one of the strongest industry groups out there. There's a handful of those buy now, pay later companies, but Affirm is probably the most well known of them. And that stock was up another 7% here today. It's been a phenomenal performer. Here's another nice little patch. Asana, again, speaking of recent IPOs, this is one that IPO'd about a year ago. Ticker symbol is ASAN. This is actually one of the strongest performers on the stock selector tool that we offer our premium members here at Market Scholars. And we use that tool in my Monday top-down trend trading class. So Asana, not only just today being up about 8%, but for quite some time has been one of the strongest stocks in the entire market. Another somewhat recent IPO, DoorDash, was up about 5% here today. So kind of seems like we had a bit of a run there on recent or newer companies that had some pretty strong days here. Let's talk about some of the negative performers now. And you can see some of the bigger players in China once again down, like Alibaba was down 1% here today. Baidu was down 1.3% today. So continues to be some ugliness coming overseas in the form of, communist China's government coming down with, interesting regulatory decisions. And seems like one of the more recent hot button issues here the last couple of days is what they will be doing with their casinos. And there's a lot of Chinese casino companies that are they're on the New York Stock Exchange or the NASDAQ over here, in addition to being over on the Hong Kong stock exchanges. So it does impact U.S. investors a little bit more there. So for those of you that have been watching like Wynn shares or Las Vegas Sands shares, they've been struggling a little bit more recently. But even some of these Chinese internet companies still can't seem to get out of their own way. A lot of pressures coming from that area of the world here recently. And then you see quite a red patch over here in this particular area in the lower right-hand corner. And that's where the materials are housed. I mentioned in the intro that the strong dollar today does have an outsized impact on materials and energy. And you can kind of see that with your own two eyes here. BHP Group, which is a big Australia-based mining company, was down 3.7%. I believe they are the largest mining company on the planet. So that's a big move right there. Rio Tinto, another big foreign mining company, down about 5%. We saw Newmont Mining here in the United States, the biggest gold company here in the U.S., down about 4% here today. Freeport-McMoRan, a big copper company here in the U.S., down 6% today. Sabine, this is more of a platinum and palladium company, not as well known, but it was down about 8%. And then Vale, another big foreign diversified mining company, down 5%. So that seems to be where there was some bloodshed here today as a result of that really strong U.S. dollar. All right, let's get back into some charts now here with a traditional view. You can see we've got our 4-grid pulled up here. This is chart 4B for those of you following along at home. And as you can see, we continue to have bearish postures across the board. So with that pink background color across all 4 of our key U.S. equity indices is a dead giveaway that we continue to have those bearish postures. Now there are of course ways to kind of distinguish between the charts despite all of them sharing that common aspect. One thing that should stand out to you guys immediately is the color or the shading of the background. In this case, the Dow Jones Industrial Average has that dark pink colored background. And what that is signifying is that we now have a strongly bearish posture. The other 3 charts have what's known as a weakly bearish posture. And the reason for that is that those green lines, which is the default line that we use when we're talking about posture in this video, on the market forecast technical indicator, that's the intermediate line. In all 3 of those other charts cases, the green line is falling, but it hasn't passed below the chart's midpoint yet at 50 or less. You can see, for instance, The Russell 2000 is at 56 and falling. The NASDAQ Composite's at 71 and falling, and the S&P 500's at 54 and falling. So it is possible that if we get another down day tomorrow, and remember we've had a lot of down days lately, but if we do get another one tomorrow, we could potentially see the S&P 500 and the Russell 2000 joining the Dow Jones Industrial Average. Now, I'm not sure if I'm necessarily anticipating that right now, but it is a possibility. Tomorrow, remember, is an important day. It's options expiration day for the month of September, so you might find some individual securities having some pin action where they're pinned to certain strike prices, and it might cause a little bit of extra volatility compared to what you're used to. But right now, I would say that background color on the Dow Jones Industrial Average being that darker shade of pink, and that has existed since the 10th, so almost a week at this point, it has been in the strongly bearish posture. That's just a friendly reminder that this continues to be our laggard, and that's of course what David and I have been sharing with you for quite some time now. Remember, the Dow Jones had been a little different than the others in that it also had this red moving average for the last week and a half to 2 weeks or so, and that signifies price being below a falling moving average in addition to having the strongly bearish posture. When it comes to identifying who our leader is, there I would once again say that it is the NASDAQ Composite. Now, as mentioned in the intro, the NASDAQ was actually up today. All the other indices were down. The S&P 500 was down 0.16%, Dow Jones was down 0.18%, and the Russell 2000 was down 0.07%. So small losses, to be fair, but down nonetheless. The NASDAQ, as our leader of this market, continues to be the most stubborn. It's not letting the bears completely control price action. You can see the NASDAQ was actually up 0.13% here today. I actually kind of like the look of the NASDAQ chart as well. Some of you might say, well, are you sure you like it with that background color being, that light pink? And I would say, well, it's not ideal perhaps to see that light pink background color, but if I were to kind of see through the colors for a second and just look purely at the price action, I do like what I see here. This is continuing to be a chart that starts in the lower left and ends in the upper right. And we are currently in one of those exhale phases right now after hitting all-time highs on the NASDAQ Composite just on September 7th. We've now spent some time pulling back, but notice where we're stabilizing. I really like these charts from a trend trading perspective that have a big move above the moving average, pull back to the moving average without breaching it, use that as a move, that rising moving average as a launch pad higher, and it gives you the impression that it wants to start another move up. Now, most of you are aware that September and October can be choppier periods during the market, so from a seasonality perspective, perhaps it's not perfect from that perspective. But another thing that I have seen in the past is that technology stocks tend to do very well in the second half of the year. I've seen a lot of studies regarding that. And so remember that the NASDAQ Composite is chocked full of technology sector companies. It's not all technology sector. There's a wider diversification these days than there used to be, but still it is technology that drives the NASDAQ Composite. So I think it kind of has that ace up its sleeve a little bit there as well. And if we get another day or so of upside activity here on the NASDAQ Composite, I think there's a very strong chance that you will see that posture go right back to strongly bullish. You can see already that we had those 5 days in a row of downside activity on the NASDAQ, which did cause this green intermediate line on the market forecast to fall out of the upper reversal zone, thus giving us that weekly bearish posture. But I would contend that the last couple of days where we've seen some stability here in the chart, that it appears that the green line is pretty much going sideways here. So I don't know if it would be able to go up as soon as tomorrow, but I do think that there's a decent chance that as long as the stock market just simply stops stumbling here, that early next week we could very well see the NASDAQ Composite right back to a strongly bullish posture. And that's a nice looking chart there. So I know there's a lot more concern out there. People are nervous that valuations are too high and this, that, and the other thing. And I'm not here to say that that can't be an issue. I'm just merely here to say that looking cleanly at this NASDAQ Composite chart, it does not look terrible to me. It looks like this is a normal ebb and flow within a very strong market. So NASDAQ Composite, to me, continues to be the leader, and the Dow Jones Industrial Average, to me, continues to be the laggard. Let's go ahead and take a look at our 3 green arrows chart now, and that will be chart 4D. And as you can see here, we do have the 3 red arrows charts on all of our charts except for the NASDAQ. The NASDAQ continues to be the holdout there because it still has the green moving average right there. You can see that over here on August 20th. It closed above its rising moving average there, printing that green arrow, and it's maintained that. Remember, it only gets rid of that arrow if it were to fall below the moving average, which it has not done here. So we've got a mix of green and red arrows there on the NASDAQ. One positive element, I would say, of all of these charts is we are seeing a rounding of the corner when it comes to the MACD histogram. Remember, the MACD histogram helps us understand momentum. And when the MACD histogram has red bars like it did here, for example, with the NASDAQ for many days in a row, and then changes to gray like we see the last couple of days, what that's telling us is that the selling pressure is no longer as intense as it was in the initial sell-off here. Now, it doesn't guarantee anything about the future, but it does give you a general idea that the bulls are no longer just rolling over and letting the bears steamroll them. Now they're fighting back a little bit, and it's giving you the impression that they kind of want to push that back to the zero line. You can kind of see how that looked back here on the S&P 500, where we went to those red bars, and then it started to turn to the gray bars here, and you can see what was happening with the price action at that time. So, it's not quite as strong right now as it was back then, but at the same time, you don't want to count it out. That type of behavior is entirely possible. So, for instance, over here on the NASDAQ, we had these red bars transitioning into gray as we had this pullback back to an uptrend. Same thing happened here. Red bars transitioning to gray in this mini pullback here, and we're having it again. So we're kind of seeing that formation on all of our charts right now, and that gives us a little bit of optimism that maybe the bulls are trying to take the baton back from the bears here. And maybe if we can just get past this options expiration period tomorrow, markets will start trading a little bit more organically again as soon as next week. Let's go ahead and pop on over here to the internet. I always like to get a chance to say thank you to all of you that help support the market outlook. You guys really came out of the woodwork for me the last time around, and I really appreciate that. Thank you to each and every one of you, 108, that stepped up for me there. So thank you to Austin, to Carlisle, and Tat, and Fun Jonesy, Margie, and Jonette, and Ken, and Kirk, and Joe, and Dave, and Mike, and everybody else. There's too many names to rattle off there, but I see all of your notifications coming in. So I appreciate each and every one of you. It goes out of your way to take the 5 seconds to let David and I know, hey, please keep doing these free videos. We really appreciate them, and we really enjoy them, and it's worth your 3 hours of effort to do them. That's the way that you can send us that message, is to simply click like for us there. Remember that you can find that tweet pinned to the top of our timeline. So that's probably the easiest way for those of you that are on Twitter a lot. Otherwise, you can find it right underneath the video that you're watching on our website, where we have that embedded Twitter widget where you can click the heart button there, or you can find the link to the tweet in the description area within the YouTube player if you watch it over at youtube.com. Otherwise, you can also find the link to the tweet in the email that we send you for those of you that are on our notifications email list. So 4 different ways you can easily find that tweet each and every time for those of you that want to take the 5 seconds to help us and encourage us to do these free videos as often as possible. Thank you very much. I know many of you do that every single day, and it does go a long way for us. Also, while we're over here, just a quick reminder that we taught our normal classes here today. I taught my question and answer classes, and that recording has now been posted. We talked about Fortinet, and we talked about Albemarle. We talked about Dick's Sporting Goods, and man, there's some incredible numbers from Dick's Sporting Goods. That's been one of the companies from a brick and mortar retail perspective that's been really impressive throughout the crisis. We also talked about Smuckers and kind of how do we manage different trades. Remember, right now in the Market Outlook video, we have the September 120 put that's still on on right now. And as long as Smuckers close above 120 tomorrow, we should be counting that as a win. But it's not all that far away. So if tomorrow's a really tough day on the market, who knows what will happen. But right now, we seem to be in pretty good shape with that Smuckers 120 sold put that we had done previously. Also got a question on how to use chart 1D, which is our 24 grid. So for those of you that were curious about how to use that and how I think about that particular chart for our Monday top-down trend trading class, that will be a good 30-minute discussion there about how you can use that for your own benefit as well. We also had a question about how to think about the length of time in the puts that we are selling and some of the pros and cons around that, and how to maybe approach selling puts as a way to immediately get a discount on it, using an example with Prudential there. So if you're interested in those topics, you can find them in the recordings area of our Trading Rooms calendar. For those of you that are premium members, remember the Q&A sessions are exclusive to the premium members there. And then David taught his ETFs class here today. Tomorrow he'll be teaching his technical analysis class, so make sure you stay tuned for that as well. Let's get back on over to some of our charts now, and let's do our chart, our 12 grid chart, which is chart 5A for those of you following along at home. And a reminder for those of you that are newer to the video, if you see the background colors of the charts pink, that means that they have a bearish market forecast intermediate posture. If the background colors are green, that means it has a bullish intermediate market forecast posture. So let's talk through what we identify here today. And as I mentioned in the intro, the US dollar was one of the surprise winners here today. US dollar was up about 0.5%. Remember, for a currency that's the reserve currency of the world, that's actually a very big move there. We're talking about billions, if not trillions of dollars of money changing hands on a regular basis there in the currency market. So when you get a 0.5% move, that's actually considered quite aggressive. So today was an aggressive up day for the US dollar. That tends to have a negative impact on the commodities. So you can see right over here, gold fell out of bed here today. So I'm gonna have to keep my eye on that. Remember, I've got an iron condor going on gold right now, where I saw kind of neutral price activity here on gold recently. I was kind of hoping it would stay in those bands, and I'm still okay with where our strike selection was there. But that kind of came out of the blue there all of a sudden. A 2% drop in gold pushes us way down here, which it's not breaching this prior low at the beginning of August yet, but that very well could be in store if we continue to get further dollar strength going forward. That move in the US dollar today was strong enough to push us back to a weekly bullish intermediate posture, and also we now have a green moving average as well. Price is above a rising moving average, so that was an aggressive move there today. You kind of have the opposite impact here on gold, where gold fell dramatically, and we now have a weekly bearish posture on gold, and we have a red moving average telling us price is below a falling 30-day moving average. Interestingly enough, oil did not seem to suffer here today, at least not to the extent of gold. Oil was effectively flat. You can see oil was up in the case of USO 0.02%. I know natural gas has been a little bit hotter here recently as well, so maybe some interest in the energy complex here more recently. But oil and gold are kind of heading in opposite directions at this exact moment in time. Oil does have a strongly bullish posture with a green moving average. But one thing you'll want to be on the lookout for if you're trying to get ambitious in the oil market is that we are up here at a resistance level, a horizontal resistance level that was pretty strong from the early July into mid-July into late July period. It seemed like we had a bit of a triple top around there, and that's kind of where we're trading right now. So would be nice to see us blast up and through that area if you want to get really ambitious there in the energy patch. And of course, all bets are off if we continue to get dollar strength. That's all else being equal will hurt oil, but of course there's a lot more things than just currency movements that affect the supply and demand dynamics within the energy markets. We saw the U.S. Treasury yield, the 10-year U.S. Treasury yield, pop a little bit higher today. You can see that we ended the session at 1.33. That's a bit of a change of pace from where I was at Tuesday as well. A lot of times I do the videos on Tuesdays and Thursdays. A lot of time I'll roll from one to the other where you see a slow transition, but this is kind of something that was an immediate reversal. Remember on Tuesday we were looking at this candle where the 10-year Treasury yield really fell out of bed, fell below that moving average, caused the bearish background color, and now here just 2 days later it's like we've almost completely eliminated that entire move and we're back to a strongly bullish posture, green moving average there. Interestingly enough, we do have the TLT that's still holding on just barely to its own bullish posture. Remember, that's fairly rare. Oftentimes, this chart and this chart are going to be completely opposite from one another. When interest rates go up, bond prices fall. And usually the postures kind of are, like a Rorschach test where, you open it up and one side is doing one thing and the other side is doing 180 degrees different. So right now you certainly saw the sell-off in bonds here today. TLT was down 0.5%. So that part is normal and natural, but it's just a little odd that they're just a little bit off in their click when it comes to their posture setting there. So if Treasury yields continue to go higher in the coming week, then I would suspect that long-term U.S. Treasuries will find their posture go back to bearish as well. But right now, who knows? Both of them are actually trading above their moving averages, so both of them have a shot at gaining bullishness going forward, but they won't both go up forever. Eventually something will give there. So we'll keep our eye on that and keep you informed as things develop. One interesting thing about foreign bonds here all of a sudden, notice that we have an oversold cluster signal on foreign bonds. Now what I'm using as my proxy for that is BNDX. That's an ETF ticker symbol that you can use to look at foreign bonds. And these have been kind of in a downtrend ever since topping out here on August 5th, but the selling has been intense enough that you now have maybe a possible reversion to the mean trade to the upside that could take place after now having that oversold cluster signal there. Bitcoin prices were down just a hair today, but like I mentioned on Tuesday, I kind of like the setup there where this thing was coming down to the moving average and looked like it was bouncing up and off of it. So remember on Tuesday it was still that bearish background color. Now we do have the bullish background color for the posture, and we continue to trade above that rising moving average. So I've been quite bullish on Bitcoin for much of the last, let's call it, month and a half or so. When it started to get above the moving average around here and stabilize there, in other words, it wasn't just a quick pop and then drop again, since that moment in time, I've much rather have been a bull in Bitcoin than a bear. Of course, trading Bitcoin is a little bit more difficult as a lot of that gets done outside brokerages like Coinbase and the like, so you don't do it quite as much at Schwab and TD Ameritrade unless you're willing to go into the futures market. So you just got to be a little bit more careful there. There's some trusts out there. GBTC can get you done there, but for the most part, it's a little bit more complicated to trade Bitcoin. So some of you might not have dipped your toes in those waters quite yet, and I can certainly understand why. On the top rung, somewhat similar conversation to what I'd mentioned about the 10-year Treasury yield. Preferred stocks also had a very rapid turnaround in just 2 days. When I was with you on Tuesday, this thing was looking pretty ugly all of a sudden. 3 straight down sessions, really breaking that moving average, and the last 2 days have completely eliminated those downward movements. So it seems that preferred stocks and 10-year Treasury yields are moving in unison with each other right now. And like I mentioned to you on Tuesday, that is natural. Typically what you find is that the banks are the biggest issuers of preferred stocks, and most of you are aware that banks do better from a net interest margin perspective if interest rates are rising. So if you tie all that together, you do see a little bit more correlation there between preferred stocks and in the 10-year Treasury yield. Also, be aware that the developed foreign stocks got their bullish posture back. I mentioned to you guys on Tuesday that that was the one of these top three that appears to still be the leader, despite all of them being bearish at that time. So it should not be surprised to see that we are back to our bullish posture on EFA. That continues to be the leader right there. Be aware that EEM has sold off so hard here recently, again, because of China concerns, that we now have a red moving average in addition to a light pink background color there on EEM. Let's take a brief look at the sectors here now, and that will be chart 5C for those of you following along at home. And here you can see it's kind of red or pink for most of these 12 charts here, the exceptions being consumer discretionary on the left and energy on the right. Remember, energy has maybe been benefiting a little bit more with oil prices near their 3-month highs. Energy stocks are nowhere near their 3-month highs, but at least they stopped going down when oil prices have been going up so nicely. So maybe a little bit of a benefit right there. We now have a green moving average telling us that price is above a rising 30-day moving average in addition to having a strongly bullish posture. So maybe, just maybe, we're going to start carving out some sort of a support here. I don't know. I'm always a little bit hesitant about my thoughts around energy because they've just bludgeoned people for years, right? Every time you kind of have some optimism around, hey, this is the time they're going to make a move, they just come out and it's like whack-a-mole. You're right back down again. So got to be careful in that area, but there is at least some signs of life here in the energy patch. Discretionary actually looks quite a bit better. It's up here at a horizontal resistance area, and it does have an overbought cluster signal right now, but it kind of gives me the impression that it wants to bounce up and off of this moving average and break to new multi-month highs. A lot of that will be dictated by Tesla and Home Depot and Amazon, as those are the three big players within XLY. But right now, I'm reasonably pleased with the behavior I've seen in the last couple of days, bouncing up and off of that moving average there. In terms of the worst performer here today, it was energy. So despite them having a bullish intermediate posture, which goes back further in time, today they were the worst performer, down 1.13%. Materials was right behind them, down 1.08%. Remember, all those mining companies are within the materials area there. You now have a red moving average there on materials. In terms of who were the day's biggest winners here today, we did see real estate go up 0.19%, which was second to discretionary, which was up 0.46%. Let's get into our trade application example now. And for that, I'm going to pull up chart 3A. This is our swing trading chart. And many of you know I'm a big fan of the Crispr companies. They are companies that I personally believe are going to change the world. Now, that's a big statement. What I don't know is how it will affect stock market participants in the Crispr companies. We talk about them a lot in my premium classes here at Market Scholars, and I've tended to support more of a basket approach. But obviously I don't have the perfect ability to do that at all times here during the market outlook videos. So today I thought I would add to our exposure. Remember, we already have some exposure in Editos. This is the trade that, for those of you that will recall, it was a very timely trade, so it was one that gets brought up a lot because it worked out so well. We got into it right here. It was on this big candle here. You can go back and listen to the presentation on YouTube on June 15th. We got into Editos on this big sell-off day right here, and this thing has just erupted ever since. We got into it around the mid-30s, and it's trading at 61 right now. We've had to roll our sold calls a couple of times along the way, and those of you that are premium members will have gotten my Telegram message earlier this week where we once again rolled the short call side up and out, and we still have the long call which dominates the trade there. So we've done extremely well. On Editos, we're up about $2,000. Now, that doesn't factor in some of the other trades we've done there, but in general, that's one contract there. So that gives you a sense of how well that's done for us in that particular case. The long call is up well over 100% there for us. So doing pretty well with Editos, and I plan to continue to make that a long-term performer for us if I can help it. Now, one thing to be aware of, Editos has the ability to impact all of the CRISPR companies here in a couple of weeks. They've got a big data announcement on one of their key drugs, and it's going to be a doozy. It's going to be a very important one. Sometimes they're secondary kind of data points, but this will be an actual big moment here. And so I'm telling you that cleanly right now because theoretically the stock could go down 50%. And I don't say that lightly because this is a situation where these companies don't make money. So although I personally believe that gene editing will change the world in dramatic ways within a fairly short amount of time, within the next decade, none of these companies really make any consistent profits. They are all basically research organizations that are doing some really interesting science, but it has not translated into actual FDA-approved products yet. But if they are approved, I do think it's going to change medicine forever. So it's going to be interesting to see who the big winners are going to be in this space. We've already got one horse in the race, so to speak, with Editos. But again, they've got their data coming out at the end of the month, and it could very well go down 50% if it's not interpreted positively. On the other hand, who knows? Maybe the stock goes all the way back to where it was trading up here at 99, at the beginning of this year before that big fallout right there. So expect lots of volatility out of Editos, and I do personally believe that will then go into volatility within the other CRISPR companies as well. And I've got kind of a watch list over here of a lot of those big CRISPR companies. Here's Editos, by the way. Notice it went back to a bullish intermediate posture here today with that background color going back to blue. So I kind of like it stabilizing around that upward trending moving average. ARKG is kind of a proxy for those of you that don't feel comfortable playing in just one of the individual stocks. ARKG is Kathy Wood's ETF for Genomic Revolution, and while it's not purely a CRISPR ETF, all of the main CRISPR companies are within ARKG. So it doesn't move in lockstep with the companies, but in general, it does kind of go in the same direction. And you can see ARKG did have its own posture shift from the pink to the blue background today, a little bit of trying to get some support around this area here. Beam Therapeutics, which is more of a base editing company, you can see it is also trying to rebound here the last couple of days and now has that blue background color. Selectus, this is kind of has its own technology outside of CRISPR, but it also does gene editing. It had a big run here a couple of weeks ago, so it looks a little different than the others, but it is around its moving average right now where theoretically it could turn around. It didn't do very well today, so you'll notice that only Selectus and Beam was down basically 0.04%, so basically flat there. But Selectus was the worst performer of the batch here today, so this one might be a little dicier there. Caribou, which is a company that I have some interest in, as you guys have seen on Twitter if you follow me there. It's done spectacularly well since doing its IPO just a couple of months ago. You could have gotten in around $15 or $16, and it would have gone up to $32. That's a double in a short period of time. So it's kind of digesting some of those gains. It was up today, but we just don't have as much trading activity on this one. So it could be quite erratic going forward. We'll just have to keep our eye on that. Let's talk about DTIL here as well. This is Precision Biosciences. Kind of like the behavior out of DTIL here today. This one had kind of a nice close above the high day, and it almost gives me the impression that it's breaking out of that downward diagonal line right there with us closing at the high of the day. You can see the background color went back to blue there as well. Graph, so this graphite, I did a trade on this one within the Market Outlook videos once upon a time. Did not work out, unfortunately. We caught it. I was hoping it was going to bounce right here, and then we saw that breakdown here the week after that. So that one did not work out as well for us as Editos did. Nonetheless, it's starting to stabilize stabilized once again here as well. Background color went back to blue the last couple of days. Now again, keep in mind context here. Stock market was down today, yet you'll notice that most of these were up. So it's showing some resilience here all of a sudden here today. Now there's Intelia. We've done trades in this presentation on Intelia in the past as well. It had a pretty rough last couple of weeks, but is stabilizing right around its moving average. Background color went back to blue there, suggesting bullish near-term behavior. SGMO. This one's a little dicier. I don't know if I trust it as much as many of the other ones. Nonetheless, back to a blue background color there with a long lower shadow today. However, that is a new low on SGMO. So this one's, I think, maybe not quite ready for prime time yet. Nonetheless, helps support the conversation with that near-term posture going back to bullish. And then there's Verve Therapeutics. And like Beam Therapeutics, this one is a base editor, which is kind of second generation CRISPR. And you can see it really fell out of bed here a couple of days ago on pretty much no news from what I could tell, but just as quickly as snapping right back. This is a recent IPO as well, similar to Caribou, just did its IPO back here in June. And had a couple of ugly days here, but today surged right back 8%. So a big volatility there with this one, but in general, still holding those higher highs and higher lows along the way. So let's now talk about CRISPR itself. This is CRISPR Therapeutics. Oftentimes when people hear me talk about CRISPR, they think I'm talking about this company. I'm usually referring to CRISPR stocks in general, all those that I just rattled off. This is one of several CRISPR companies. They are just probably the most notorious because they were smart enough to put CRISPR in their name itself. But I would not necessarily suggest that this is better than the rest. It's just simply they were wise enough to put it in their name so other retail investors can easily remember this one. They are the second largest CRISPR company behind Intelia at this moment in time. And what we did for our trade application example here today, first of all, be aware we had a prior trade going on this one. It was a long call spread that was going to expire tomorrow. Earlier today, for those of you that got my Telegram message, I closed that down at a very small win. I think we ended up making like $15 on it or something like that. The timing, I think, was bad because to me, it looks like CRISPR is about ready to bounce here, CRISPR Therapeutics in this case. And so it's kind of unfortunate to shut down that trade that was doing reasonably well for us along the way up until this week when it had this sell-off here. And so that one kind of left a bad taste in my mouth. And again, we made money on it, so I shouldn't feel bad about it or anything like that. It feels unfortunate when you shut down a bullish trade near the end of the expiration cycle at a rare time when it had a sell-off along the way and it just formed an oversold cluster signal. So what I decided to do after I shut down that original trade that was going to expire tomorrow is open up a brand new one because I still think that there's still some life to this chart here. Like the other CRISPR companies, you can see the background color of the chart is blue, telling us that the near-term posture is back to bullish. Not only that, but we have a bit of a bullish divergence signal setting up here as well. Notice that we had this low in the near-term line, and then we had this follow-up low, which is slightly higher than that low. So the near-term line went up at a time when the price candles that are associated with those two moments went down from right here to right here. So price was not recognizing that the underlying indicators were actually strengthening. And to add to that, on that second trough right there, the slightly higher trough, we got what was known as an oversold cluster signal where all three of those colored lines are in the lower reversal zone on the same day, suggesting that we might be in store for a bit of a reversal to the mean candidate here. Notice that we've had two other instances of that here just in the last 3 months. This is a volatile security. Notice over here we had this oversold cluster signal, and within just a couple of days it bottomed and it had a massive reversal to the mean move. It went from 113 all the way up here to 141 in a heartbeat just in a couple of weeks. Well, that sold off, came back down and gave us another oversold cluster signal right here. This one wasn't nearly as aggressive in the reversal to the mean, but it was still a good move. It did stabilize that day at around 116, and within just 3 days after that, we were up at 126. So it gave us a good $10 per share to the upside. So then that brings us to where we're at right now. Once again, oversold cluster signal along with a bullish intermediate confirmation signal. We'll see where this one takes us. Obviously, The moving average color is red, so for those of you that are looking for a little bit more directional activity, this is probably not a trade that you're going to be all that excited about to do a bullish trade here. But I've been kind of looking for an excuse to add a bit more Crispr exposure to this portfolio anyway. So I'm going to use that as an excuse to be brave and try to get in down here near this kind of triple bottom that's also in place over the last couple of months, right around, let's say, the 116 level or thereabout. So what I opted to do was what's known as a buy right. It might also be referred to as covered stock, depending upon your broker. But the idea behind the trade is to buy 100 shares and then immediately sell a call against it. And what I ended up doing was selling the 140 call in the month of October. That would put us back up to this prior resistance area if it does get there. And I was able to get, my 1% return on risk by selling that, which then helps to offset the cost of the trade. So my total trade amount, I think, was like 116.69 or something like that, because basically I'm buying 100 shares here and then I'm subtracting out the premium that I received for selling the 140 calls. Now keep in mind, that does have the potential of selling away my upside as well. And we had already that conversation with Editos over the last several months. So sometimes these things can just spike out of the blue, and sometimes you end up regretting having sold a call against it. But you can work your way out of those, like we've been doing with Editos, and do it in many cases at credits. You also have the possibility of the stock really breaking down. As I mentioned before, I expect a lot of movement out of these Crispr companies at the end of this month upon that Editos data release. And so if it's a good release and it is viewed positively, like the last several Crispr data releases have been, where there haven't been any difficulties within the trials and everything is going as expected, then we might see all of these Crispr companies move up together. On the other hand, if they fall flat on their face and they say a lot of people got sick off of it, or it didn't work as expected or what have you, then you could also see the opposite impact where all of these Crispr companies could get crushed at the same time. So without a doubt, this is not for the faint of heart, but because I'm a big fan of the Crispr technology, I like to look for those setups when they exist. And this is one where I kind of felt bad about having to close the trade down here, our previous trade, while it was at what I perceived to be at probably a lower point, and instead I'm going to turn around and let's let it run again for the upside, if that's what is in store, with a reversion to the mean type of a move like we've seen the last 2 times we've gotten those cluster signals. So anyway, that's our trade application example for the day. I apologize for the length of the video tonight. You guys get me talking about Crispr companies and I can go and go and go. So I'll do my best to tighten up our time the next time around. But if you did get value out of that conversation or out of the other analysis from the rest of the markets with stronger dollar and falling gold and increasing interest rates and preferred stocks tying into that and all of that jazz, I ask one and only one thing out of you. Simply take the 5 seconds out of your day to click like there for me on Twitter. As long as we're up and over 100 likes on Twitter, I'll be more than happy to do the video for you again on Tuesday when I'm next scheduled to do it. So David should be back with you tomorrow. Otherwise, I want to wish you all a wonderful weekend and best of success with your trades and your investments. Goodbye for now.